All right, what's up, guys? Steve here with the Breakout Project. Hey. What you're looking at on the screen here, first and foremost, this is a new strategy that I have been turned on to by some members of a group that I am part of. It is actually the Lux Algo Trading Community Group, and this strategy is making a lot of money. I haven't been trading nearly as much the past couple weeks because I have family obligations to take care of in the mornings with my son. That's when I like to trade, market open until about 12 o'clock. And unfortunately, that's right in the middle of it. So the trades that I have been taking have been few and far between, but they have been very profitable. So let's jump right into this. First and foremost, I'm showing you this because in order to take advantage of this, you will need two things. You will need TradingView, okay? That is the trading platform. So you're on the website here. I'm going to present you with the link, okay? So just don't go to tradingview.com because you're not going to save any money. I'm going to present you with the link that will be in the comments and descriptions of this video. That will save you some money. It's not a lot, but hey, it saves money. So when you're up here, you go to pricing. Here's what I'm going to suggest for you. Okay. I myself have the premium. I signed up for a year, save $120. Plus you're going to save some money on the link that I'm going to share with you. You don't need the premium. Okay. You can do this simply with the essential. All right. So you're going to need TradingView first and foremost. Secondly, you're going to also need Lux Algo. Okay. Now Lux Algo does have a ton of free indicators, but the one that you're going to need for this strategy in particular is not free. This is well worth your money because also with this, you're going to get access to their Discord group. You're going to get access to traders, which are a lot smarter than me. You're going to get access to many other strategies that might also fit your way of trading. As I said, trading is not one size fits all. You got to find out what strategy you want to use, what strategy you feel most comfortable with, whether you're swing trading, whether you're day trading, whether you're scalping, whether you're playing options. But this strategy in particular, what I've been using it for is more so of a scalp, but not necessarily a quick in and out within 30 seconds. This is more like a hold for a minutes to an hour or so. And that's part of the reason why I haven't been trading that much, because I've been focusing on learning and perfecting this strategy. And I have also came up with a couple of my own wrinkles to the strategy that is not part of the original strategy, but will in most cases work for you. So once again, this is Lux Algo. Don't simply go to luxalgo.com. I will present you with the link, save you some money in the comments and description of the video. It's not going to be a lot, but it saves you money. Okay. Let's get out of here and let's get right into the juicy, meaty part of this, because it's all about making money. Okay, so I've also switched up an instrument that I'm trading with this strategy simply because it moves a little bit slower. It's a lot easier to gauge, but you can use this strategy across any instrument, mostly across any time frame. If you're going to be more so doing swing trading, buy and hold option contracts for a couple days to a week, couple months out, you're going to want to use higher time frames. Right now we are looking at ES. ES is the futures contracts of SPX, SPY, XPX, and SPY. Okay, let's get into it here. We're going to take today. All right, now you're looking at my charts here. I made them nice and clean so that you can see all my indicators are off except for this. All right. This is the Lux Algo Oscillator Matrix. So what you're going to do, of course, indicator, once you become a Lux Algo paid subscriber, you will get access to these. All right, so let's just go up here so I can show you quick. Just type in Lux Algo. All right. See these ones with the little green locks? Those are all paid. All the other ones that don't have the green locks are free. So you can see that they offer a tremendous amount. But these ones in particular, particularly the Lux Algo price oscillator, is what we need to for this strategy. So in order for the strategy to work for you, once you get into the settings, right, you can turn off a good majority of this stuff. But one thing that you want to make sure is that you have your signal. All right, you have SMA and TS. You want to have it TS, and then you want to have it set to 3. I've played around with the colors. So for example, let me show you the. All right, so basically, here's watch. I'll go like this. Keep an eye on the charts. So that's your hyperwave. See how it turned from green to white and turn it back to green. Okay, see how this turns from red to say yellow, which also looks like green. I'm gonna turn it back to red. Okay, so that's your hyperwave. You can play around with all this stuff. Here's your divergences. Basically, what your divergences are. You're gonna see, these white lines down here. All right, and then if the divergence occurs up here, you're going to see these orange lines. Okay, these are known as bullish, and the orange is bearish. Once again, it's all changeable. Right here, you have your upper confluence. I'll show you that. Keep an eye on the chart. Turned it off, but you really don't need it for this strategy. I just have it up there. Turn it on. Lower confluence, same thing. Okay. Money flow. Money flow is right here. See how you have green and then you have like a whiter, that's like, see, overflow. So that means that we have significant bullish money flow. When you see this white, that means that we have significant bullish money overflow going into the market. That is going into the market. Here's red. We have bearish money flow. Money coming basically out of the market. Okay. Overflow. Significant. You understand? Okay. Let's get into this. Cancel this out. Here is the main concept of this strategy. It involves Fibonacci, right? Retracements. You're not going to use them up here like you normally would. You're going to use them down in this oscillator matrix. I'll show you that in a second. All right. But what you're looking at this oscillator matrix for, and you're seeing, lots of peaks, lots of troughs, peak, trough, peak, trough, peak, trough. Okay. Pay no attention to that right now. The main concept of this strategy is when you have a change of character and a break of structure in combination with each other, okay? That's when you want to utilize this strategy. So what do I mean by change of character, okay? Well, see how we were making lower lows here on this oscillator matrix? Lower lows, and we're making, lower highs, and we were also making lower lows, right? And then we made this lower low here, and all of a sudden oscillator matrix reversed, went up, it took out this most recent high, took out that most recent high, took out that most recent high, and made a new high. And you can't really see it all that well because, let me just take off this white line. See, I had that white line there to show you that this is a valid setup for a valid trade because this was a change of character and break of structure, slight break of structure, although you'll see it in a second, to the upside, bullish, okay? Now, let me show you what you want to do here. So let me take this off, get rid of that, remove, okay? So this is this morning, 7:45. So say you got to your computer, say at 9 o'clock this morning, and this is where the oscillator would have been. You look back and you said, okay, what happened with price? What's going on? What are we going to do here? All right. So the first things first is, now I have this set up a little bit differently because I am going to show you some tricks with this oscillator matrix. But this is a Fibonacci. See how I'm doing this here? Fibonacci. Okay. How do you get Fibonacci? Well, you go over here, right? See Gann Fibonacci tools, and you want fib retracement. Now I have mine set up as my favorites, and they'll show up here, but this would be the fib retracement. Now how I have this set up is, let me just show you, get out of here. I'm going to baby steps here. I'm going to make this easy for you. I'm going to remove that. Okay. So I want to draw a new fib. Okay. So I'm going to draw a fib. I'm going to go like this from the bottom of this to the top of this. Okay. Now, what are you looking at here? Let me try to make this a little bit bigger so you can see it. Okay. So you see, I have a 0 here. I have a 100% here. Okay. Right here, I have 0.14, 0.21, 0.29, 0.50, 0.71, 0.79, 0.86. Okay. So the reason why I've done this is because a lot of times, for particularly newbies, it may get a little bit confusing, because which way are you supposed to draw your fibs? Well, let me just show you here. If you drew this opposite, then of course your 0.86 and the 0.29 to 0.21, that would all just be reversed. The 100 would be up here, the 0 would be down here. So I have come up with my own and said, well, why am I doing that? Well, simply because if you take, first and foremost, pardon me, my phone was ringing. These were this is known as the sweet spot, 0.71 to 0.86. So the person I learned the strategy from, who developed the strategy and figured it out on his own, was a very smart person. And so that he finds out that most market liquidity, buying, selling, occurs in this zone right here. So I said, well, I'm just going to take that zone and I'm going to, make it the opposite on the other side of the 50%. So what I did was, 0.14. You see how this is 0.86. So you take 100 minus 0.86. And then, of course, you get 0.14. You take 100 minus 0.79. You get 0.21. Take 100 minus 0.71. You get 0.29. All right. It's not rocket science. But now how do you do that? Well, you go right click on that, settings, and here's where it's at. So see how I have the 0 checked, 0.14, and I typed this in myself. So, boom, 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 0.14. You can type this one in, whatever you want to make it. Put this one in, whatever you want to make it. You can make this 0.35 for all I care, but it's not going to work for this. Okay, you want to keep these. This is how you want to have your fib set up. So basically set it up like that. On the other side over here, 0.5, 0.71, 0.79. Of course, I made these nice little colors, so that in between the yellow lines here, in between the yellow lines are the sweet spots, all right? And then what did I do? I went down here. Sorry, my mouse was acting weird. I went down here and I hit save as. And what did I save it as? Oscillator fibs, top and bottom. Okay, so I'm literally breaking this down for you. Step by step. All right. So now what is the strategy? Now, okay, so this right here, this says a change of character, right? Bullish change of character. Why? Because we were making lower lows and lower highs. We reversed and we made a higher high. See, like this, see how it went boom, boom? That would also be a break of structure. Let me try to zoom in to show you. Came up, kind of went horizontal, then back vertical. Break of structure. So we have a valid trade set up. So now what are we going to wait for? Okay. So let me just tell you the proper strategy first, and then I'll tell you what I found. All right. So the proper strategy first is that when you have a break of structure to the upside, okay, or a change of character to the upside, and this is completely reverse to the downside, all right, and I'll try to show you one of those from yesterday. But we have a break of structure, change of character to the upside. You draw your fib from the low spot of the hyperwave, this is known as the hyperwave, to the high spot of the hyperwave, okay? The hyperwave is going to retrace. See how it's retracing here? It retraced back below the 0.86, came up, and see how the hyperwave turned green in this 0.86 to 0.71 zone? So this is on the 5-minute chart. Once this hyperwave turns green in here, you would want to take a long position. And lo and behold, look what occurred. Okay, so you would have taken a long position. Say you would have got in at the top of this candle. You would have had some drawdown. There's no doubt about that. Okay, you would have had a 10-point drawdown. And what occurred was you would have bought in at 41.85. Well, you went up to 41.201. 15-point long position on NQ, or excuse me, on ES. That's a very good trade. Okay. Now, let me show you what I found. So the proper strategy, as I said, is that when you have a break of structure to the upside, you are waiting for this. Now, this hyperwave doesn't have to necessarily come down below this. If this were to come into here and all of a sudden start curling up and turn green, as soon as it turns green in this sweet spot between 0.71 and 0.86, you are to buy a long position. And then basically, you are to monitor. Now, the reason why I have a clear chart is because I wanted to show you how simple this is. But when I put this on over here, it gets a little bit more messy. Okay. So we're just going to basically, let's just keep that right there. Put this right here. Okay. So let me show you where you would have wanted to get out at. Okay. So you have an area of resistance up here, all right? And you would have bought in down here. As your price was breaking through the trend line right here, okay, and I said these are all Lux Algo indicators. As it's breaking through the trend line, you're going to want to start your stop loss. You're going to want to start moving your stop loss up. But as this would have got in here, so you were basically 5 points away from this area of resistance. So as you started getting closer to your resistance, you want to start paying more attention to possibly exiting the trade. Okay, keeping a stop loss, and I mean, who knows? This could have went back up here to 205 and bounced directly off of that. We don't know. Or it could have shot right through. Okay, as I said, we don't know. We just have no idea. But when you're taking this trade into consideration, you have bearish money flow, you know that we're basically catching a quick reversal before another sell-off occurs. Is what we're doing. All right, now what I want to show you is what I have found. All right. On this original move up, right? Okay, so you've already drawn your fib. And on this original move up, you have it up here at your peak. Okay. What I have been finding is that this hyperwave tends to turn and make the most moves in these two areas, the 0.71 to 0.86, 0.14 to 0.29, which is simply the opposite and reverse of this golden pocket zone. So if you look at here, all right, see we got our peak up here, And then what were we doing? We're bouncing around, bouncing around, bouncing around. Well, if you would have taken a short position in here, you would have had a pretty nice move down. In fact, you would have had to move down 4196. And if you would have held to 4169, right? So that would have been closer to 30-point move, right? So you got to keep in mind here, you got to trade with the direction of the market. All right. So the markets have been over the past couple of days been going down. So what you need to know is that when you're taking this, even though you're having a break of the structure to the upside and change of character, when you're taking this trade, you need to be very vigilant in where this is going to go to, because the markets have been going down now. So that's why, as I said, as you get closer to this area of resistance up here, you want to put your stop loss up here. Once this candle breaks, you keep going up, you keep moving your stop loss up. Normally what I would do is I would normally put it a couple points below the top of that candle. And then as this candle keeps going up, put it a couple points below the top of that candle. And then at least you are protecting your profits. Okay. But what I've found was most of the moves, like let's just look at this quick. Most of these moves are occurring in this area, right? So you can move this down, right? So after your first one, you can then move this down. You don't have a lower low, but you do have a lower high. What do I mean by lower low? Well, let me move this whole thing up a little bit. Down. Okay. So you didn't have this structure down here wasn't broken. That's your lowest low. This structure up here was your highest high, right? You do have a lower high, but you don't have a lower low. So you would want to keep this at the bottom of this. After this move occurs, all right? After this move occurs, you could then simply bring this down to here, and look, it turned red in this area again, this golden pocket. And what occurred? Another sell-off. All right. And then you can go like this. Say you got out of that trade. Say you didn't hold. There's your lower low. It's still red in there. And another sell-off. Okay, so that's what I've been finding. I've been looking at this strategy for a while, and it's just what I've been finding. So let me show you another one here. Let me remove all the drawings from this. Okay. So here's another one. This is from yesterday. Now this is the opposite in reverse. Okay. So we're actually having a break of structure to the downside in this aspect and a change of character. So, that's at 9:45 in the morning. Once again, say you got to the chart, say around 9:15. And what are you witnessing? You're not seeing any of this to the right, right? You're only seeing what's current and to the left. So here, you're noticing the hyperwave come up here. And all of a sudden, boom, we have a change of character. Hyperwave then comes up and back down, and you have a break of structure right around here. So what are you doing? You're basically taking your Fibonacci's, and you're going from like this, which is the high, to the low, right? Then now the original strategy is you got this. You're actually waiting until this comes back up, and then you get a turn of the hyperwave in here. Okay, so you got a turn of the hyperwave in here, turned red. If you would have entered a short position, this is what most of your day would have given you. Okay. Now, the theory on the original strategy is that you're supposed to hold this trade until hyperwave turns green, which in this case right here it would have. So if you would have held this trade from 4247 to turn green, say right here, 4231. So you would have had a 30, what's that, 734 point move to the downside. That's a lot of money on ES. Tremendous amount of money. Now, what I've been finding, my strategy, and it's not going to work every single time. So you have to be vigilant in this. All right. And you got to know, all right, if you're having a downtrend, you want to know that we're going to try to catch a quick reversal before another downtrend continues. And that's what I was doing with this strategy as well. Okay. The more secure option is to simply, once you have your break of the structure downside, right, change of character, you're waiting for your hyperwave to come back up. And I said it doesn't have to go below here, or it doesn't have to go above here. It can simply come into this area, say maybe up to the 0.79, turn red, and as soon as it turns red, you're entering, and then you're holding until it goes back to green. All right, that's what the strategy is. Now, what I've been finding was, like, for example, I took this trade yesterday. All right, I took it before I went to my son's swim lessons, and I had drawn this to this, and I was sitting here watching. And what we were doing here, as I was sitting here watching. Okay. Now I had to leave at 10:30, right? So I had entered this trade, unfortunately, a little early. I would have liked to enter this trade at the bottom, as would have any trader, but I entered it a little early. I was in probably about a 5-point drawdown. Okay. I normally set about a 8 point stop loss. I was in a 5-point drawdown, but I was watching this occurring here. So, like I said, these are 5-minute intervals. So at 9:50, we made our peak. After the original sell-off, we made our peak, right? And then, or I should say our bottom. And then we got 5 minutes. So I was watching this for 20 minutes, and basically this didn't turn green until about 10:25, which is exactly when I left. I was jumping the gun. I was anticipating what I saw was going to happen was what actually happened. But basically, I had entered the trade a little bit early, and then I had to leave at 10:30, and I was already in 7 positions, I believe, or 6 positions. And I sat there and I looked. I said, okay, where's price likely going to retrace to? I took the top of this candle right here. I set my limit sell order, or it would have been my limit sell order because I was in a long position. And lo and behold, while I was at my son's swim course, what occurred was exactly what I thought was going to occur. We turned green in the sweet spot, and boom, 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 up. And we peaked out at 4249. I had sold at 4245 or 46, I think, or not. Yeah, 45 is what I sold at, right? So I missed out on 4 points. Oh well, but I still had it was a 42. I was in at like 4230, I believe is what it was. So I had a 14-point long position profit on 6 contracts for ES. Good money, real good money. Okay. What I have is 6 contracts. I trade with Apex, and what I do is I basically take one contract on 6 different accounts. That's what I do. I have them all linked together through a trade copier. Now let me just show you one more thing. So you would have also found this downside move. So how would you have found that downside move? Let me show you. Okay. So right here, which was at 3:25 in the morning, so you would have woken up a little bit earlier. You are coming up here, right? So you have, from this point in time here, you have a change of character, right, to the upside. You have a break of structure to the upside. You're coming down, coming down, coming down. You have another break of structure to the upside, right? Coming down, coming down, okay. And then all of a sudden you're getting down here. So if you just would have simply drawn your fib from here to here, let me make this a little better. What occurred right here? Your line would have turned green, or would have turned red in the sweet spot, and you would have caught this entire move down, which ended up being 4246. If you would have held it to went green, 4229. So that would have been another 16-point move, right? So that is a little take on this strategy. It is the oscillator matrix through Lux Algo. So as I said, you need a break of structure, change of character, draw your fibs from top to bottom. If you have a break of structure to the upside, what you're looking for is a retracement back into this area, green hyperwave, taking a long position. If you have a break of structure to the downside, change of character to the downside, what you're looking for is you're looking for a retracement up into this area. Hyperwave then turns red and you're taking your short position. That's how it works. It's been working for me. It could work for you. You're not gambling. You're not just throwing out random trades. You're actually following a strategy. You're following lines and levels. You're following confluence, which is multiple factors occurring that are giving you more confirmation of a trade. Try it out for yourself. Let me know what you think. Hopefully it works for you. Thanks for being, guys. Have yourself a wonderful day. It's Steve with the Breakout Project. Just a quick note. I don't like what I see on the markets. I'm just giving you forewarning. I do not like what I see on the markets. As far as wealth building to the upside. I like what I see in the markets on the downside. I don't like what I see in the markets on the upside. We shall see. Take care.